Paraguay's robust growth has been accompanied by declining inflation and sustained by monetary policy when needed. Credit must be given to its central bank. The institution, after the approval of its banking law at the end of 2016, is now focusing on governance. Follow me as I meet with Central Bank Governor Carlos Fernandez Valdovinos. Stronger economic institutions have indeed shielded Paraguay's export-based economy from shocks in commodity prices. Having helped achieve macroeconomic stability and improved banking rules, Mr. Fernandez Valdovinos is now keen to discuss the country's next steps in developing and regulating other parts of the financial sector.
Well, this has been very busy times, especially since 2014 when commodity prices dropped a lot. And that, of course, affected not only Paraguay, but also the main trading partner of Paraguay. Given that, we have to implement some counter-cyclical policies. Talking about sustainable economic growth rates, we really believe that the basis for all that are good and sound fiscal and monetary policy. You cannot do anything without them. Those are the basics for any successful economy. And Paraguay has been doing very well since 2003, at least. In terms of inflation, we're a country that never experienced hyperinflation. Our currency just celebrated the 73rd anniversary back in October. So we have a history of controlling inflation, not only during this administration, but also before. Of course, we're modernizing our monetary policy framework. As you mentioned, since 2011, we have an inflation targeting regime that has been quite successful. We always complied with the target. More than that, we always have been slightly below the target. That is important. We don't want to be at the top of the band or something like that. So we continue to work on improving the work of the central bank because we believe that a stable, low, and predictable inflation is the best contribution that a central bank can give to a society.
You have also worked on a banking law that has recently been passed. So give me some details about this law and the importance for the market.
The previous law has been passed after the last and large financial crisis back in the 90s. So the idea was to put strict regulations in the law because we lack any regulation at the time. So the idea was to put everything on the law. But after a while, you need some flexibility on accommodating to changes in regulation, to changes in best practices. So what we have done last year was to pass a brand new banking law that will allow the central bank to keep changing the regulation as needed. As regulation and supervision of the banking sector evolve, then we're going to be able to change also our regulation because that requires only a decision by the central bank board, not anymore a change in the law.
Because of course the previous setup came from a series of crises that really shook the banking sector and the whole of the economy. So rules were much less flexible, much more ingrained in...
Exactly, under the law. And that could be good for you to start building the confidence on the banking sector. But after a while, it became an obstacle for further developing the financial sector. So that the idea was to give some more flexibility, as in other countries in the region. So we introduced all those changes. We passed finally last year. Now we have a new step that is modernizing the central bank charter. That is going to be also an important step towards a sound and robust financial sector.
It sounds like the whole of the country is moving towards improving governance, whether it's in government, the central bank, and your role is monitoring other activities, other economic activities. So what do you plan to achieve with this charter, and what is the timeline?
I think that you're right. The society and probably politicians understand the importance of good fiscal and monetary policy. Now we need to move to some structural reforms. We cannot do much only with low inflation, control fiscal deficit. We need to do something else. And that's the reason why we start moving towards all these legal reforms that are going to be important for the future of Paraguay. In the near term, we're trying to pass the banking law, but then we also have after that, a project to change also the insurance law, because even though it's newer than the other two, was not very well written. And also we have probably some changes into the deposit insurance law that is going to be important for bank resolution in the future if something happens in the financial sector. So all these legal changes will be important to keep it safe, the financial sector in Paraguay.
And another much expected and anticipated change would be the regulation of pension funds.
Yes, that's right. That's also an important one. And also not to forget the change in the chapter of the development bank. So as you can see, there are so many changes in the financial sector because we really believe that financial sector is crucial for a country to achieve a sound and robust economic growth in the medium term.
So with the new pension funds law, you expect to create an investor community that is regulated at the moment it isn't, and that also would imagine can help develop the infrastructure financing structure that is needed for the country.
Just to be specific, it's not a pension law per se, it's an investment of the pension funds law, because we're not changing any parameter in the pension legal framework. What we're trying to do is the same as we do with the banking sector, putting some limits on when and how they can apply all the funds that are related to future pensions of the people here in Paraguay. What we found when we came into government was that most of the funds were side deposit with very low returns. That is very bad because it's very bad for the pensioners in the future, and it's also very bad because the only funds that the country has for long-term investment was put into side deposit. That was awful and very inefficient from an economic and financial perspective.
Very well. Well, thank you very much, Mr. Fernandez Valdovinos.
Thank you to you.